So anyways, good morning, everybody. Really good to see you here. Thank you for attending today's Forex trading strategy session. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. So yesterday we did a bunch of scalps using binary options. Well, they weren't all scalps, but we did a bunch of trading yesterday, binary options. Did quite well for ourselves. Cool. Right on. Today, I think the markets are going to open a little more quietly, and that's because this afternoon the Fed meeting minutes are released, and so I think some trades will get on and some trades will come off before that risk event. But it behooves everyone to wait for the risk event to pass, get the new information, and as you know, we trade in an efficient market, so that information will be processed. And if things need to be rebalanced, they will be. But right now, the number one question in the Forex trading market, I don't care where in the world you are, if you're a market participant, the number one question is, when is the Fed going to raise interest rates? That's it. And how far and how fast, right? Those are the follow-up questions. And the meeting minutes are a fantastic way to try to figure that out. Now, this is the meeting minutes previous to their announcement, so we know what their decision was, but what are they thinking, so on and so forth. Have you ever read Fed meeting minutes? Downloaded, read them? It's really interesting because it says a few people feel this way, people felt this way. It doesn't really say who says what, but it gives you a pretty good feel of what was said. And I think it's worth the time and effort to download and read, because it will tell you exactly what they're talking about at the meetings and what their concerns are. So anyways, let's get going, and then I'll do a quick trip around the world, give you an update on the status of the currencies. We can look at the stock markets and commodity markets, so on and so forth. What do you think? Sound like a plan? Let me remind you that trading and investing is risky, not appropriate for everyone. Past performance, good or bad, never predicts future results. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Nice. Okay, so currently as we look around the world, British pound is strong, euro is weak, Swissy is neutral, yen was strong, then weak, and then stuck in the middle right now. U.S. dollar has been weak, but is turning the corner as the United States of America is waking up. In fact, I'm staring over the horizon right now, and the sun is just coming up, and it's dark gold, beautiful. So the world's just waking up, and dollar's becoming strong. Nice. Aussie's strong. CAD is strong. Kiwi strong. So commodities are doing very cool. Let me get some intel on the other general market. Hang on. I usually have this going. I apologize. Almost there. Just not log in. Okay. S&P 500 futures are flat. NASDAQ is flat. 10-year Tino flat, but still 1.89. My gosh. When they finished the taper, Do you guys remember that, the end of the taper tantrum and all that kind of stuff? Or the beginning of the taper, I should say. And the Fed was going to do it, and everybody was wrong. Then they did it later. Do you guys remember what the 10-year T-note was then? What was that, 18 months ago? 3.0. 3.0. Here we are. 1.89. Wow. Just crazy low. Oil way back up there, 52, almost 53. USD yen down 0.31%. Euro USD up 0.27%. The CAC flat. The DAX has lost almost 0.5%, and the FTSE's made about 0.5%. So basically, money came out of Germany and went to the UK. So that's a quick look around the world. This is a yen scan. Make sure you're looking at it. Everyone's on the same time frame. Well, this one's off. So put that to the hour. And what do we see here? The common denominator on the right is the yen. So is each of these equal? No, euro, like I said earlier, is weak compared to everything. Well, against the yen, you could see euro yen's actually coming down when CAD yen's going up. Pound has been up and down and up, but certainly not down, down, down like the euro. And boy, this Aussie yen looks like it's on a tear now, huh? Looks like it's on the free and clear program. Blue skies for Aussie. Good, I'm going to sell it. Yeah, but that's what I do. Okay, so this is called relative strength. Who's the weakest? What's the weakest currency on the on these four charts? Euro. Okay, so that's why when I do these things, when I say, all right, well, pound is strong, euro's weak, you're like, how does he do that? Yeah, well, first of all, euro's weak, right? Well, I look at this, boom, euro's weak versus yen. Okay. That's one thing that you certainly should be doing before you trade. You should take a look at the market and see how it's going. So right now you're like, well, I think euro might be weak and the commodities seem to be strong. But let's look at it from another point of view. Let's just double confirm. How about euro versus other things? Is it just the yen that's strong? Right? We know it could be just the yen because, again, euro yen was the only one coming down. So is there anything weaker than euro? Would be the next question, right? Because if it's weaker than euro, oy vey, compared to what we've seen already, right? Then it's going to be significantly weak. So take a look. Anything weak euro? Well, got to double check that I'm measuring on the same time frame. Let's see. Well, Kiwi is stronger than euro. Pound is stronger than euro. Swiss franc seems to be stronger than euro, and Aussie is stronger than euro. All right, so I still haven't found anything weaker than euro. Now, if you were looking for something strong, you could do the opposite of that, right? Let's say you looked at that and said, well, euro's weak, but which one's strongest? Which one has pulled the euro down the farthest? Oh, it looks like Aussie, right? And then you can maybe change this to like Kiwi's brought it down, but Aussie looks farther. And you're like, well, what about euro versus Canadian dollar? And you can pull that up, and it might be even farther. And you do the opposite. Instead of looking for weaker things, you can look for stronger things. For example, if you were going to sell euro versus anything, what would it be? So you could just pair up commodity currencies coming down faster. Very often I do things like, you see these pluses and minuses? I don't really show them that much anymore. But there was a time when if I wanted to buy something, like let's say the pound was strong or the dollar was strong or something like that. And I look around the charts, I'm like, man, I want to buy, how about US dollar? Let's say man, I want to buy US dollar today. What should what should I use to fund this trade, right? And very often I would do things like Swissy yen. And I could look at this and say, well, I'm a buyer of dollar. What should I sell? And if Swissy yen was going up, then yen is weaker than Swissy, and I'd be long dollar yen. Right? If Swissy yen was going down, then Swissy's weakened, so I'd be long dollar Swissy. You understand that? So I would start just to do some quick analysis, right? For example, there was a very long time when you could wake up in the morning and either sell euro dollar or sell pound dollar and probably do all right. So I could confirm if dollar's strong, what am I going to pair it up against? And then I'd look at that and say, oh, wow, euro pound's going down, so euro's going down, I'm selling euro dollar, done. Now, if you have 18 screens like I do with at least 4 charts per screen, you just do this like a glance. You don't even have to move your head. Your eye goes to the right, and you're like, euro pounds down, sell euro, and your mouse has already moved to the sell button on euro USD, right? Just snap, less than a second. Nice, huh? So it's just like, boom. Now, what's the key to success in that whole discussion? That you've made a decision. Right? You've made a decision. Again, I'll say, if I've decided to buy dollar, whoa, right there is the hard. The rest should be fairly easy. But some traders, all they do is sell one currency pair over and over and over and over, buy it, or that's all they do is look at Euro USD. Well, Euro USD is more than half the Forex market, so I suppose you're not going to have a liquidity problem, that's for sure. But is it always the best trade to be on? If you made 50 pips today, should you be happy? Well, not if everything else fell 100 pips, right? It's all relative, my friend. All right, so anyways, looks like pound is strong today and all the commodity currencies. Nice. Very nice. By the way, mortgage applications, they had not good data this year, or this. Yeah, refis are way down. Everyone that can refi has refied. So the refi market's dead, but actual mortgage market should be doing fairly well. All right, so this trend has been holding up. And that's it. It's been a long time since I got oil right. We were waiting for it to come back and back and back and back, and we had our kill zones and stuff, right? And the 52, it got going, but like this whole rally that we've had over the last 1, 2, 3, 4, 5. Didn't see it coming, and even if I did, I would have disagreed with it. So just like not right. So I look at things like more oil supply and stuff going on, but I think Saudi Arabia is actually raising rates again, right? So that's the first time probably. So anyways, that trend is going up, and this increase is certainly helping oil exporters. Right? Yeah, anyways, commodity currencies are doing well. Where are we, relative to, history? Let's zoom in a little bit here. That's not right. Hang on. That's not printing right. We're way up here. This is, let me put it, do I have a cache on this? Let me check. There we go, finally. So where in historic terms, well, I'm going to sell it up here around 52, 53. Right? So you need to decide, are you going to sell down here or are you going to buy dips? Okay. So that's that. Okay. On a longer term basis, oh wait, it just, oh, nice. Slow today, huh? Did it just update? Yeah, we are up here. Oh. Every time I change the frame, the data changes. Hang on. There we go. All right, so we are up in here. Let's get rid of some of these channel lines. I mean, it was something I did a long time ago. It was goofing, right? Okay, clean this up a little bit. That's our old one. So I'm going to drag this across, and we actually might have an op here. We have a divergence on the oscillator. Daily stochastic divergence. I think reasonable resistance. Come on now. Okay, I think that's pretty reasonable resistance, isn't it? Interesting. I almost sound like a villager on Minecraft. Oh, let me redo that. Let's grab all of this. La di da di da 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 da. Yeah, I might want to sell this. Yeah, it really depends on what happens later today. Yeah, interesting. Well, maybe not right this second, right? But let's leave a note. Sell oil here. How about that? It's interesting. Like it should have popped up already. So, you can get one of these things today, sort of up to here maybe, and then what? Step it down. What do you think? Yeah, well, Mike says maybe sell now. Well, I can't say it's at resistance, can you? It looks more like support to me. So that's why I'm like, let it come up for a while, and then boom, we'll sell it up there. Well, it doesn't have to be a double top. That would be ideal, But I forget where we were looking, but there was some divergence which suggested that it might just not have the guts. But I think we could agree this seems to be more like support than resistance. So, the difference is, oops, the difference might be minor. Hang on, gotta get rid of that. But discipline is what's important, not price. So I'm still thinking, wouldn't it be great if it at least made a 382 or 50%? That puts us short at probably $52. So price wise, wait, no, we're at 52. $53, right? We're probably short at $53, which isn't far from where we are now. Right? So price wise, there's no real difference. But look, we're not in the business of selling at support. So let's just see if we can be patient enough to let it go up to 50 and then give it then dump it and say, well, we see this area as a double top that's already been tested, right? And that, it's been tested, it's been respected, so now we're going to short the lower high, right? Retracement, sort of like a 1, 2, 3 pattern. I'd rather put that down in the history books. Right? If you wanted to be aggressive, you should have sold in the gray zone on the first touch, not 19 hours later. Right? If you're so aggressive, you should have been in here. So now let's just wait. Because where's the next level? Where's the next level of support where there's like a 90% chance of something happening? Well, here. So just, don't worry about it. Forget about it. Don't worry about it. So it's not just the moving averages, right? Like where we are now. Price, follow price line. I mean, it's right on top of this thing. Like, there's no need to be that aggressive. So just chill out. Be patient, right? Patience, grasshopper. And just, remind yourself. Just remind yourself, be your own coach in the sense where you just say, how would you teach? And that's why I brought it up right away. Would you teach somebody to sell at support? No. And are we closer to substance? Yes. So if you were patient and disciplined, even if you're not, let's just say you were. Fake it till you make it, right? That was advice in my book. Pretend you are the perfect trader. Pretend you are patient. Pretend you are disciplined. What do you care if you're just practicing on a demo account, right? So just wait. And if you were patient and disciplined, it would come up here, and then you'd place a sell. And then if you just do that every day for months and over a year or so, one day you'll realize, oh my gosh, I totally forgot. I've been faking this whole time that I've been patient and disciplined. I just forgot I was faking. I started out faking it, and then I just forgot I'm faking it, and I've just been patient and disciplined. Huh, well, what'd you know about that? Right? Well, Mike, if you were trading pure moving averages, you would long it. So again, Mike's, when you're like, sell it. No. Well, you can't sell it. That's the whole point. You can't sell it here. But if you're a bull, buy it off the 21. You bet. Let's go. So now, we're talking about me now. I don't want to buy it. Not yet. Not till we get past this upper gray zone. But, I've been wrong about of oil for over a week. That's fine. Right? But, how do you trade? Well, let's go over the basics of trading here. And let me get my drawing tool. Where did I put it? Oh, Here she be. Hang on. Boom, 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 boom. Boom, 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 boom. Because, while we're waiting for the drawing tool, I don't really want to be a buyer up here because we're so close to the, redonkulous distance. So I'd rather it break the gray zone, go up to $60 and come back, and maybe I'll buy a dip. Okay, hang on. Almost done loading this thing. Come on, Windows. All right. All right. A drawing tool here. Fine. Thank you for your patience, by the way. Okay, so, larger macro traders trade this. Okay. We know that price action is going to behave very similar ways on all time frames. What you're observing, or what you see, is only your observable in your particular time frame, right? So on the shorter time frame, even though just there's a move up or a wave, if I dare say, you still have this up, 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 down, down, retracement, right? We'll skip the little mini one, right? Up, 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 up. Well, actually, you know what? I won't. Okay, it makes a higher high, comes down. This old resistance area is now support. Up, 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 down, down. This old resistance area is support. Of course, you can also see how the moving averages are kicking in. Up, 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 down, down. Now we're at old resistance, should be support, and then so on and so forth. Okay. No, there's no conflicting indicators, Mike. All of that is filtered out because you have a bias. I mean, look, if you're a bull, how much easier could that possibly get? I don't think it could get any easier. Where people get mixed up is they have a decision to be a bull. That's where the problem is, but look at that. That is just so easy. But if you're like trying to have the charts tell you what to do, you're not looking at it right. It's just technical analysis, okay? Which is important, but you need to be able to come to the table knowing what your role in the market is. Right? It's like getting invited to a poker game. What's the first thing you should do when you walk in the room? Figure out who the sucker. If you can't figure out who the sucker is, you're the sucker. And you should probably leave. Yeah, try to look. Yeah. When one of the dudes says, "Hey, do you have a PlayStation?" You know he's planning on losing pretty quickly. Push him out. Yeah. So, anyways, you need to know who you are in the marketplace. Are you a bull or a bear? You should do that one of two ways, maybe even both. Long-term technical analysis, so let's say a daily chart or even more, really, but I don't prefer to go that far out. Because remember, technical analysis is price action, right? It's price and time, but it doesn't tell you that market sentiment has changed this week versus 2 months ago. Very often there's nothing, the market's completely, so that's why I like fundamentals as well. Not just pure technicals, right? So, but one way or the other, you look at a daily, like, you know what, oil's going to recover. Fine, good. The rest should be easy because it's just action, right? It's made a higher high. You're a bull. Do you buy high? No, you buy. Where? Well, you take the old resistance area, and it's now support. So you wait, just like I was telling you, wait, do your job. Your job is to wait. Okay, it comes down, you buy it. Makes a higher high. What do? You take the old resistance zone, bring it over, and you buy at the new support zone in the future. Not high, low. So now you buy this dip. Great. Buy. What's your job now? Say, well, I'm making money on that one. Take the old resistance, bring it over. It's the new support zone. So now in the future, now you've had to wait 18 hours or so, like I said earlier, and now we're in here, right? Which is our old resistance zone. So you buy it. Just buy it, right? That's it. Easy. It should be easy. And when do you know it's over? It goes like this. Knocks out one of your trades, but your other three are cash out, move on to the next day. Okay? So that's when you know it's time to go home, right? Is when you get one of these things where you have this as your support, and this is maybe your second chance support. Because like I've always said, if you've decided to be a bear today or this week or this month or this year, whatever your decision-making process was, identify at least 2 levels of support or 2 levels of resistance, depending on the scenario. And so what happens if it makes a higher high, then comes down, and then does this? Take a break. And could it do that there? Oh my gosh, of course it could do that there, right? So, but, so you lose on one of your trades. Okay? And you're like, whoa, 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 double top, whoop, 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 whoop. Right? Shield up, red alert. Romulan bird of prey off the pole, up in, right? Full power to the front shields. Whatever. Yeah. But unless that happens, just go up the tree. So, learn on this one is I think there's too much oil in the world, that we're not getting positive macroeconomic data, and I believe this is resistance. That's all. So like so on these higher time frames, like a move like this, right? You could be trading it on like move this. Right? Very similar type trades, right? Now, why does it reverse here, guys, and go back up? So we got all these different fractals. Why did the traders indicated in the light blue, why did they do that? Because you got a bottom, top, Fibonacci retracement, and extension. Yeah, just a fib of the rise. But notice there's all these different time frames going on. Well, that's the fractal geometry, right? Oops, I didn't want to do that. Right? And so so this would be like a swing trade in blue. You buy the 50% retracement. You can see we have it all marked up previously. And you're in it for a week or 2 or 3 or 5. You're not doing the little orange, extension retracement, extension retracement, extension retracement. You're not doing any of that. All you say is, yeah, I'm long oil at 46. So what do you use the moving averages for? Well, it's sort of the same thing. So let's let's load this up a little bit. So let's zoom in. So let's say price action doesn't tickle your fancy. Okay? You get a change in direction here. Let me use black. Moving average crossover. 21 moves above the 55. That means the market is bullish. Technically bullish. The market. The market, not price, just the market. So now your job is to buy the market, right? When price goes from overbought to oversold and is supported by the moving averages. So this would be a buy rate. Okay? And here you're riding the 21. You're bullish and aggressive. Nothing on this planet could make you bearish. It's completely impossible to sell when you're above the 55. Above the 21. The next step to this is at some point the market's going to cool down. It's going to break the 21 down to the 55. Because the 55 is lagging well, right? So eventually the 55 will catch up and flatten out. Okay? When the 55 flattens out during consolidation, what happens to the 21? Well, the 21 is going to cross over like this at some point. The market will become technically bearish. Now, when price, or if price, no, it'll be when price breaks the 21 and drops to the 55, you're bullish, but you've become conservative, and that you'll believe that the probability of a double top has increased exponentially. So if this came down to the 55, there's an extreme likelihood that price goes stuff like this now. And eventually, let's switch colors again. Let's just go to black, I guess. Excuse me. It wouldn't quite work this way with the moving averages, but bear with me. So it'd be more like this. And we would just like this. Typically what happens on a breakout after a moving average crossover is it comes back to the cluster. So it's not a 21, it's not really a 55, but then it takes off. And now the 21 is in control. It'll be the similar thing where eventually we get to the top, we kick on the 21, it makes a lower high, lower low, another lower high, lower low, back to the 55, lower low, back to the 20, lower low, so on and so forth. So when you have, this scenario, the 21 EMA is your buy zone. Or sometimes it's helpful for people just to simply look at your the 2155 EMA, the space between it. Just consider it your cloud, and that you just simply ride the cloud, right? Every time price comes back to your cloud zone, I'm going to have this now as a green zone, and just consider it almost like a pivot point, right, where you buy the green zone and sell the red zone. Well, the angle, let's say the distance between the 21 and 55 is your cloud, right? And if the moving averages roll over here, the cloud turns from red to green. This area in here would be red, or from green to red. So this area in here would be your red cloud. Does that make sense? And you're just buying the dips and that kind of stuff. Yeah? But I tend to look at the angle and separation between the two, because it'll tell me as the angle and separation increases here, that means the market is still expanding. It's still incredibly bullish. But at some point, like I show here in the rollover, the angle and separation will diminish, and it's a clue. So what can I use to help me discern the level of bullishness? How do I measure the level of bullishness in a market? The market might be bullish, but how bullish? Is it becoming more bullish? Is it becoming less bullish? Angle of the moving averages. Yeah, but there's a tool I could use that might make it easier. Because, maybe you're not good at spotting that. We could use an alt. Oh, yeah, MACD. The moving average convergence divergence. What does that mean? The moving average convergence divergence indicator is simply whether two moving averages are converging, right, or diverging. That's all MACD is. That's all it is. D. Give it two moving averages over a certain period of time, right? So you got three settings, right? Give it the two moving averages that you want to measure over what period of time? Over how many candles? A million candles or 3 candles? Obviously, that's going to change the way it draws, right? So you just simply say, all right, Mackie, I'm going to use the 2155 EMA to measure the marketplace. And I want you, let's do it this way. I'll use this one. Okay. All right, MacD, you work for me now, Bubba. And I want you to tell me the distance between the 21 and 55 EMA. Okay, so let's do this. 21 EMA, 55 EMA. And how many candles should you measure when calculating the 2155 EMA? Let's go over 8 periods. Okay? So now it's simply saying, MACD, use the 21 and 55 EMA. Boom. Bam! Oh, snap. Got it at Target. It was on sale. It's real nice. All right. But what does it all mean, Basil? Well, let's do that. Let's talk about this. Hang on. You know what? Let me open this up. Let's fatten up the colors a little bit. Right? First of all, let's change this just for fun, green. Fatten this one up a bit. I don't know, both of them are 4, right? Okay, let's try this. And then the water line should be, we'll fatten that up so you can also see the water line. Good. All right. There it is. So, what is the MACD telling us now? Well, when you're looking at the histogram now, what you want to do is look at it this way. Oh, hang on. Sorry, I'll do it from this side. See this 0, 0? Okay, call that the water line. The histogram is telling you a couple of different, worry about that right now. All right. When MACD crosses above the water line, the 21 crossed above the 55. When MACD crosses below the water line, the 21 is crossed below the 55. So going above the water line or below the water line is just the 21.55 crossing. Up and down, down and up. So I can look at MACD here and say, oh, 21 is above the 55. guys following me now? Everybody here? Everybody awake? Okay, cool. So you can look at that right away and say, boom, 21 just crossed above the 55. I'm bullish. Hoo-ha! Right, Ace? Hoo-ha! All right, so yeah, so right there, 21, I'm a bull. What about these crossovers? What do they mean? Let me change those colors just to separate the difference. We'll do blue. Okay. What does this mean? This means the angle, or sorry, the separation between the 21 and 55 EMAs is diminishing. That the 21 is getting closer to the 55. Now it's still bullish, it's still above it, but it's contracting, it's converging. Moving average convergence divergence indicator. So this is saying the two moving averages are converging. And what? 21. This crosses back up. The 21 is now diverging, or other words, away from the 55. Now, of course, MACD is set at its own settings. I don't use those settings because I just simply want to know what's the angle of separation between the 21 and 55. Why? Because I use the 21.55. So that's all it's saying here is now I'm bullish because the 21 is above the 55. I'm a bull here in the black circle. Now what about this? The MACD then starts to move up again. What does that tell me? It tells me I'm a bull and price is dragging the moving averages away from each other. They're diverging. The angle and separation between the two moving averages are improving. Another way of looking at it is the MACD is bullish in a bullish market, that you should be buying right there. That you should be buying right here. So on and so forth. Okay, that's the basics of it. And like anything else, you can make it so unbelievably complicated that you couldn't possibly trade it properly. Okay? So that's another way you could do it. Like if you just don't see, some people just love the price action. Up, 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 down, down, buy. Up, 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 down, down, buy. Other people like the moving averages. Oh, it's touching the orange line, buy. Oh, it's come back to the orange line, buy. Oh, it's come back to the orange line, buy. Other people just, they need refinement. And so they're like, all right, MACD's above the waterline. I guess I'm a bull. MACD's cross, whatever. It's all the same thing. Okay, but again, I want you to understand what the algorithm is telling you. You're not just buying a bunch of squiggly lines. We don't. It's not a video game that you're playing for a living, right? So you better understand the tools and what they're telling you, so that you can make more informed decisions, and it's not black magic or voodoo magic or whatever. Okay. So in fact, one of the things that I tend to do with from time to time is have people draw the MACD from scratch. So like I'll give them a chart like this, and no MACD, it'll be deleted out. There's a easy way to do this. Okay. I can give a chart, say draw the MACD. And if you can't do it, you have a problem. You're not that good. So you should know your tools to that extent. I should be able to give you this chart. This should be like a very easy exercise. Okay? And I'll probably do this. So I'm 90% sure I'm going to build like an advanced school for traders where you become like a chartered Forex trader type thing. I should be able to just say, part of, let's say, a midterm examination. I give you this chart with that MACD, and I'll say, draw the two MACD lines. And if you can't do that, you're going to fail. You're just not that good. That should be an easy assignment. Calculate the MACD. Now, have you ever seen the math that goes into MACD? Oy vey. Some smarty pants came up with that, but he probably can't trade, right? I know Gerald Appel was the inventor, but I'm sure he just hired someone to do the math. Gerald Appel was the one that said, I need two moving averages are either getting close together or moving away from each other. That's what a trader would probably say. Some math guy, and they come out with this really complicated formula to make it happen. So I'm not asking you to memorize the mathematical formula. Just know what it does and just draw it. You should be able to now just draw it because the mind is so powerful. Amazing, right? Now, I've taught MACD for a long time, many, many, many years. How many people here, because of my training, have gotten to the point where they feel reasonably comfortable drawing the MACD? If I handed you this chart and I just said, draw the two MACD lines. How many people, only because of the training that I've provided, no other source, that's it. Does anyone here feel fairly comfortable they can draw that MACD and pass? Well, YJ, I would assume so. Ace? Yeah. Wyatt, right on. Peng, Daniel. Oh, look at this. Awesome. Mike's like not even close. Well, just put it on your list of things that we're going to work on, Mike, over the next 2 years. Okay, Mike? I don't want you to worry about it today. We're only working on patience and discipline because you don't need to know this. You don't need to know MACD. You don't need to know how to use moving averages. It's not required to be a success. You do need to be patient and to be a success as a trader. That is the number one requirement. You can't do that, go find something else to do. Go become, some middle manager, work in the, I don't know, international marketing department of some big nation, get yourself a cube and hide most of the day. Do whatever you can to look easy, right? Sleep through meetings, take hour and 20-minute lunches, and live a quiet life of desperation like everybody else. Because you're going to suck as a currency trader, pardon my French. So you might as well just collect a salary, get some health benefits, and to eat dinner and watch Dancing with the Stars, and you'll be fine. Life will be just happy. Good enough? Right? Good enough. Hey, nothing wrong with that. But if you want something different, then you have to behave differently, right? And so it's absolutely required, patience and discipline. I was actually, I'm going to go on a tangent here, but I was reading an article about Tony Robbins, and he mentors Pete Jones, one of the original market wizards. So, you might want to put that on your list of things to do. Maybe read the Market Wizards. It's not going to help you as a trader. It puts you into the psyche of a lot of these traders. And they're tenacious people, self-made millionaires from trading. But they have qualities like that. They are patient and disciplined. And so Tony Robbins was saying, that he's been working with Paul Tudor Jones for 21 years and he's never had a losing year. Paul Tudor Jones has never had a losing year. And even when in 2008, when the market dropped by 50% and hedge funds were going out of business, Paul Tudor Jones made 28%. And he was just doing his job. He works with several other very, very large, hedge fund managers and stuff. And he said the common thread, even though they all do different things in different ways, they're all profitable. They all make, $1 million a month personally or more. But they do whatever it takes to not lose. And they'll do whatever it takes to win, but it's their idea that they'll do whatever it takes not to lose, which is very interesting, right? They would rather wait and sell this 20 cents higher than sell at support, because selling at support is just a way to lose. And they'd rather just let it run. If it drops here without them, done. They don't care. Right? That's patient discipline. Now, you can be penny wise and pound foolish. He also gets a funny story where he's meeting with someone who is a multi-billionaire. So Tony Robbins, they have a meeting to meet, someplace. So Tony gets in his plane, flies out, gets to the place a day early. So he's ready, he's set, he's organized, and he's going to, do this one-on-one consultation with this multi-billionaire. Right? The multi-billionaire shows up not on time. Tony's one day early. The billionaire shows up a day late. Why? Because he flew coach and commercial and couldn't get a flight out. He missed a flight and it was going to cost him, more money, so he waited. Didn't take his private jet, didn't fly first class, flew coach to save a couple of dollars and waste a day of Tony Robbins' time. But amazing that someone would do, someone that could not possibly spend all their money in multiple lifetimes and multiple generations would screw someone over to save $50. You're like, wow, somebody's got a money problem. Amazing, huh? Can you imagine if you had $7 billion in the bank? Would you screw somebody over to save $50? Wow. So anyways, hey, it's today. Apparently we got into oil trading, patience and discipline, and using moving averages, price action, and a detailed overview of what the moving average convergence divergence indicator developed by Gerald Bell is all about. I think we should call it a day. I think it's been pretty close to an hour, huh? If you're watching this on YouTube or you're reviewing it again on YouTube, please leave some sort of indication that you you watched it and it was important to you. Huh? Give it a like. Take less than 1 second. Fine. Give it a like. If you could possibly invest 30 seconds to 1 minute of your time, actually document what you learned or how it was important to you. Actually leave it in a comment. Hey man, I learned this, I learned that. Really appreciate it. But if you're just super busy, just at least say hi. I mean, I know how it is, right? The whole world revolves around you and you don't have 30 seconds. All right, say hi. So anyways, thank you for being a client of Traders Way. Peace on earth, may the pips be with you, may our profits be above average. And I'll see you every single trading day, Monday through Fridays at 7:30 a.m. New York time, London lunch. Good luck, or let's say be careful. At 10:30, you got oil inventories, so this oil thing should do its thing. And then, of course, the meeting minutes this afternoon. Should be fun. Ken says he caught oil at 53, huh? Nice. Welcome. Cheers. By the way, you onto the YouTube page. That's where you start leaving likes and thank yous, okay? Cheers.